Hey friends, so one of the questions I often get from folks that are looking to grow their real estate investments is, how do I avoid getting hammered with taxes when I sell? So today I just really want to quickly share with you something that has helped many investors here in Northern Virginia build their wealth, especially over time, and it's called the 1031 exchange. Now don't let the technical name scare you at all, okay? It's actually very simple, pretty straightforward when you understand the basics. But let's talk about numbers, all right? Let's sit down at your kitchen table for a moment. Let's just imagine we're just chatting. And let's say you bought a single family home for $300,000 and it has not been your primary residence for 2 out of the last 5 years, which means it's officially an investment property. But now it's worth $500,000 and you'd love to sell it, which that means you have like $200,000 of equity, which is pretty awesome, right? Congratulations. Now, normally when you sell an investment property, the IRS wants a chunk of that profit. And that could be anywhere from, on that scenario, $40,000 or more gone to capital gains tax based upon your tax bracket. And that's honestly, that's money that could be going towards your next investment or your retirement. And that's why 1031 exchange exists, is to protect that money, right? It's named actually after section 1031 of the tax code. So it's a provision that allows you to sell an investment property and buy another one without having to pay those capital gains taxes right away. So essentially you're just telling the IRS, hey, listen, I'm not cashing out right now. I'm just moving my investment from this property to that one. And then IRS says, no problem. We'll hold off on those taxes then. So now here's the thing. Not all 1031 exchanges actually work the same. And many don't know this. So I'd love to share with you because I want to walk with you through what some of these different types of 1031 exchanges are that might meet your investment strategy, honestly. The most common one is called the delayed exchange. This is where you sell your property first, then you go find an investment property and you buy it, which is your replacement property, within time frames that I'll actually mention later. 95% of all exchanges happen this way, okay? But there are others. There's actually one that's called the simultaneous exchange. I don't know, you ever heard of that one? This is where you close on both properties the same day. So the home you're selling, the investment home you're buying, simultaneous exchange, boom, shakalaka, done. That's not as common anymore, okay? It was way more common back in the day. It's kind of rare to actually find that now, since timing can be very tricky on those. But for those who find the perfect opportunity before selling their current property, you need to know about this one. You find a sweet deal, you haven't even sold it, well, that's called a reverse exchange. So this is where you actually buy the property first, right, your end product, and then you go sell the old one. Now this one is more complex and it usually costs a lot more money to actually have a 1031 broker do this for you, but sometimes it's the right opportunity that just doesn't allow the perfect timing, but you need to know it is an option. And then one of my favorites is there's also, it's a construction or improvement exchange. That allows you to use your exchange proceeds to not just buy another home, but actually improve the new property, as long as the improvements are completed within that special time frame, 100 days. All right, as long as all improvements are done within a 100-day window, you can actually use 1031 exchange money to go towards improvements, which is perfect for properties that just have tons of potential but need work to match the value of what you're selling, right? And then lastly, there's something called the partial 1031 exchange. This is simply where you need to take some of the profits to be able to use for yourself and for personal use. And that's called boot. All right, so you're going to get taxed on that boot. But then you want the other cash to simply go directly into the property, tax protected. So what I love about the 1031 exchanges is how they help you steadily build a portfolio. Imagine starting with a single family rental, then using exchanges to move up to maybe buy 2 or 3 more properties. This was my first use of the 1031 exchange. Had a property down in Virginia Beach, sold it, and then bought 2 investment properties up here in Northern Virginia. And each step of the way, you're growing your investments without losing the momentum of tax bills. That's what's awesome. So the real power comes from the compounding nature, right, of this. So when you defer those taxes, you're just keeping 100% of your equity working for you instead of sending 20 to 30% out to the government. So over time, you can imagine, right, that makes a tremendous difference on how you can use real estate to build wealth. Now, there are some important rules just to kind of be aware of. First, you need to find what's called a qualified intermediary, like a 1031 broker. Often it's just an attorney. Think of them as they are who the money has to pass through. Okay, they're the escrow, and the money it can't touch you. It can't touch your hands. That's pretty much it. Okay, but you need to find that person first, and then you sell your home, and then you have 45 days after you sell your house to go identify a few houses that you might like to buy. You got to write those addresses down. You got to submit it in time. And as long as you close on one of those houses within 180 days of your sale, you're protected. Now, the new property that you buy has to be worth at least as much as what you sold the other one. Okay? It's called like-kind property. That is equal or greater value. So you can't sell a McMansion, unfortunately, and go buy a little tiny house. It has to be of equal or greater value, and that's both in debt and equity. But talk to the 1031 broker about that, all right? This strategy, guys, it has helped countless investors, all right, in our community build wealth over time. And honestly, I think the beauty of this is they get to keep doing the 1031 exchanges throughout their investment career. I mean, that's the power of it. Potentially deferring taxes for decades while growing your portfolio. That's what's awesome. So it's not just about avoiding taxes forever. That's not what this is about. It's about controlling when you actually pay them. That's what this is. So your money keeps working for you in the meantime, which is beautiful. So if you're thinking at all about selling an investment property and just want to understand maybe a little bit more about 1031 exchanges, if it makes sense for your situation, let's have a conversation. I'd love to chat, point you in the right direction. If I can personally walk you through the process and the steps, I'd love to be able to help identify potential replacement properties that align with your investment goals. That's what I do. I love helping folks in my community just invest in real estate smart. Okay, so reach out anytime. My contact info here's on the screen. Let's keep your investment dollars working for you and not the IRS.